Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about what does MongoDB's fourth quarter teach public company executives. And it starts with the fact that the company reported a SaaS-Plotion. Fiscal year 23 results were great. Fiscal year 24 guidance was 5% below the midpoint, and the stock is down significantly. Jamin Ball of Altimeter Capital has a great piece out today on LinkedIn hypothesizing that the SaaS companies are missing fiscal year 24 in order to set up for a beat and raise year ahead. And for me, I think that's an insane way to manage a business, to destroy shareholder value, to set up for a shareholder increase. I think there's something significantly different going on here. And let's go through it. It starts with this idea that there's a difference in the way you manage a company financially when it's public versus private. When you're private, you set an aspirational target and you throttle all cylinders to hit that target. If you miss, you can explain it away, you can pull things forward. There's a lot of ways to really overcome bad forecasting when you're private. You don't have that luxury when you're public. And an example is this. If you take the fourth quarter, what might happen at one of these SaaS companies is management starts the fourth quarter at a $90 million target. FP&A is telling them it's only $70 million, and they will wait until 11:59 on 12/31 for management to then sync up with FP&A's target that has been reduced to 45. And there's some real pitfalls here in terms of public markets. When you have these last minute bookings, you're not going to be able to set good forecasts about the future periods. And then number two, you might be pulling things forward in terms of your forecast, and that can be doubly negative. If you miss the current period and you pulled something forward, all of a sudden you've doubly compounded that negativity. It's hitting the current period and future periods. And that's the key here. When you don't manage this right, the compounding effect of negative issues in financial forecasting and SaaS are disastrous. And this is the bottom line. A myopic focus on the present financial period only is destructive to shareholder value. You have to be managing expectations better. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.